Did your client buy a new car and finance it in 2025? They're going to ask you questions about the new car loan interest deduction. So let's walk you through so that you're prepared for these conversations. Hi Tax Pros, this is Nadia Rodriguez, CPA, and this is your Tax Tip Tuesday. First, the basics. Taxpayers can deduct up to $10,000 of vehicle loan interest, but it has to be a qualified passenger vehicle. This deduction starts to get reduced if modified adjusted gross income is above $200,000 for joint filers or $100,000 for other filing statuses. Now, what is qualified passenger vehicle? So let's kick this off with the most frequently asked question. Does my loan interest qualify? Well, it depends. Was this loan originated after 2024? Because even though if your client is paying interest in 2025, but if the loan started prior to 2025, that loan interest will not qualify. This only applies to new vehicles. The original use of the vehicle must start with your client. Now, I know this confuses a lot of clients because really, that vehicle is new to them, but that's not what the law states. The original use must start with your client. The vehicle must have had final assembly in the United States. This means you're going to be asking for the VIN. Not only is it required on Schedule 1A, but it's also going to be useful to confirm the final assembly. Another requirement, the vehicle must be for personal use, meaning that your client expects to use it for personal reasons more than 50%. And the final requirement, what was the total that they paid on this vehicle loan interest? Because here's the challenge for the year 2025. There's no official form that will be available that tells us how much that total interest was paid. Instead, we're going to be asking our clients for that last statement in 2025 that shows the total amount paid for the interest on that car loan. This is what we're asking. When did the loan originate? Was this a vehicle that is new or used? Where was it assembled? What was your intent when you purchased it? Was it for personal use or for business use? And can you provide us with your loan statement for the year 2025 so that we can find out how much of that loan interest did you pay for the year? So let's continue this conversation. What vehicles are your clients most surprised that do not qualify for this deduction? This is Tax Tip Tuesday, brought to you by Intuit Accountants, keeping tax professionals prepared and informed.